We're going to go from Algeria to Alaska. So, a couple of forward-looking statements. A lot of talk this morning about battery metals. You can't produce the batteries, you can't run an electric vehicle, and you certainly can't charge an electric vehicle without both copper and cobalt. That's the supply side. What's more alarming in the copper space that's the demand side. What's more alarming in this space is the supply side. We've seen open pit mines 10 years ago averaging 1% copper. Today they're averaging 0.5% copper. That means you have to have twice as many mines or increase the throughput, which requires huge amounts of capital. Goldman Sachs just put out a report that said the incentive price to do that is somewhere north of $3.50 copper. I want to talk to you about a story that doesn't need $3.50 copper to make a mine. We'll make money at $1.50 copper, and that's because our grade is 10 times the average grade being mined today at Arctic. So we'll talk about that. We've got over 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million ounces of gold equivalent, gold plus silver, and 77 million pounds of cobalt. We're in Alaska. We're developing a whole mining district. We're focused on 2 deposits. One is at an exploration stage still. It's 6 billion pounds of copper and 77 million pounds of cobalt, and still growing. We're doing a fair bit of exploration, and we'll update on that. At Arctic, the more advanced stage, we've completed a pre-feasibility study. We're working on permitting and bankable feasibility study as we speak. That deposit is amazing. It's 43 million tons of 5% copper equivalent. I don't think there's another copper project out there in the world, open pit, that's at that grade. $1.4 billion NPV post-tax and a 33% IRR. So here we are in Alaska. This part of Alaska is very familiar with mining. The Red Dog mine has been operating for 30 years. It's owned by Nano Regional Native Corporation and operated by Teck. They pay taxes or make a payment in lieu of taxes that gets distributed to the borough government, the local borough government, the school district, and the villages. So this money is basically what runs this borough, this whole region. And that is our business partner. We formed basically a business partnership where we've combined our land ownerships in the Ambler Mining District, and they receive a royalty, and we have about 60% local hire. So that's the other big area that NANA really wants is local hire, and we spend a lot of time and effort on hiring and training people to be able to take the jobs. And so it's been a great relationship to build our sustainable business from and to get community support. Our second partnership is with the state of Alaska, who are building and financing the infrastructure to support development of this mining district. That's through the Alaska Industrial Development Export Authority. They're essentially a state-owned development bank. Their job is to build infrastructure, just like they did at Red Dog. They built the road and port there back in the late 80s for a $260 million investment. It'll be a comparable investment that they'll make to finance the Ambler Access Road. That road is currently being permitted. They have the draft EIS expected out in March, and with the EIS and record of decision by the end of the year. You can see by this diagram where the Ambler Mining District is. What this road does is links us up to the existing infrastructure in the state of Alaska, the highway that goes between the oil development on the North Slope and the Fairbanks, and then we would transfer our concentrates to the Alaska Railroad, and where they'd be railed down to the port in Anchorage. So all that rest of that infrastructure is built. The last piece is that 200-mile road connecting the Ambler Mining District, which AID is currently working on. The last partnership is with South32, a company spun out of BHP with a whole variety of metal production except copper. Their investment in us is just that. It's a 3-year option agreement. We've gone through 2 years. They've got 1 more year of the option, and at the end of that, they have to invest $150 million or walk away. I don't think they're walking away. Our shareholders have been with us from the beginning. This company was spun out of Nova Gold, which is a company I started over 20 years ago. I'm an exploration geologist. That's what my passion is. That's what I love to do. And so we spun this out in 2012 at the peak of the market, and we've been advancing this project ever since. Our shareholders have been very supportive. We've had a few new shareholders join the roster, including South32. Which they purchased in the market and participated in our last financing. We have about $30 million in cash. South32 gives us another $10 million here in a month or so. And the warrants that will be exercised next year are deeply in the money, so they'll bring another $10 million. So we'll end the year next year at about the same level of cash as we have this year. So here's the district. There's a long, 100-kilometer long belt of polymetallic deposits that occurs. That's where the guts of the Amarillo Mining District is made up of. You can see Arctic is right in the middle of this district. There are over 30 other known massive sulfides. And we own most of them. There's a couple on the either ends that we don't own. Here's Arctic. This is what makes this a spectacular ore body. These grades are mined in an open pit. You can see on the cross section here again, 5% copper equivalent, 2% copper, 3% zinc, plus the precious metal credits. The deposit sits in a geometry where it can be mined in an open pit. 7-to-1 strip ratio is certainly very doable at these grades. The pre-feasibility study that was released in April demonstrated the viability of this project, 10,000 ton per day operation. You're producing 160 million pounds of copper, 200 million pounds of zinc, 30 million pounds of lead, 3 million ounces of silver, and 30,000 ounces of gold per year for the 12-year mine life. Capital costs are $780 million. Cash costs, 15 cents C1 for your cash cost to produce a pound of copper net of the byproduct credits, all in, including your initial and sustaining and closure costs, sustaining capital and closure costs, and royalties and transportation, etc., 63 cents a pound. This project doesn't need higher metal prices. This project makes money at very low metal prices. $1.4 billion NPV at 8% discount rate, 33% IRR, which is why it generates about $450 million of free cash flow a year and pays itself back in 2 years. So there aren't very many projects in the world that can do that. This is an awesome project. We're working on the bankable feasibility study now, and we're lining the project up to start the permitting process next year. We only need one federal permit, and if you're familiar with permitting in the U.S., it's the federal permitting process that tends to be the slowest. We only need one federal permit, and that's a 404 wetlands and dredge and fill permit from the Corps of Engineers. All the other permits are issued by the state of Alaska, which has never been slow in permitting projects in the state. So that's Arctic. We certainly see a central mill concept here. 30 other known massive sulfides in the district. We have a 12-year mine life with Arctic as an open pit. The ore continues, will certainly be mined underground at a later date. And again, we've got lots of exploration upside in the district. Let's talk briefly about Bornite. 20 miles away, different geology. It's a carbonate replacement style deposit. Before South32 got involved, we had outlined an open pit resource of 125 million tons of nearly 1% copper, about a 2.5 to 1 strip ratio. That continues in an underground mining scenario at a higher cutoff grade, 58 million tons of 2.9% copper. Excellent grades. You can see the area that we've been drilling with South32's money over the option period for the last 2 years. There's 25 holes there and down to depths of 1,200 meters. That's the deepest hole. When you look at this in a grade thickness map, so think of this as sort of an intensity, drill intensity map in terms of the average grade of the copper by the thickness of the copper. You can see where the current resource is outlined. That's the 77 million pounds of cobalt and the 6 billion pounds of copper. We've obviously expanded that significantly with the drilling we've done over the last 2 years, including we just released results for the first set of batch of holes from this year, 16 meters of 5% copper equivalent and 0.2% cobalt. That's a fantastic drill hole. And obviously we've got 25 others to talk about, which will be included in that updated resource. This is an important slide. When you look at the copper space, there's a whole host of low-grade, big, albeit big, but very low-grade copper projects in the world. These cost billions of dollars to put into production. There are a few standouts, both of which were acquired this year. Nevsun was acquired by Zijin Group for $1.4 billion at the net asset value of the company. And Arizona Mining was acquired by our partner, South32, for $1.6 billion. When you look at the quality of our assets, they're similar. I would say, I'm prejudiced of course, but I'd say that Arctic is a better ore body than than the Timok project in Serbia, and we're not in Serbia. This is an opportunity for investors to get in at still a great valuation. I see this as a 5 times valuation in the next 2 years. Thank you. We're in booth 26.